Morning, YouTube. This morning I wanted to take a minute to share something with you I was interested in currently. Where does this thing fit into a portfolio and an investment strategy that you might have? You should have an automatic ETF contribution every month. It should have been building for maybe a couple years. You should have, a few $100s in dividends, per year on that money. You should have an automatic savings into cash that allows you to purchase on the dip. Possibly looking at other investments, maybe a 401k going. But after that point, there's some real interesting investments right now, especially that can create a higher return, but also have a lot of volatility. So you want to make sure that the amount you put in is an amount that when it drops in half, doesn't make you scared and have to sell it all. Because if it does, it's not a good investment for you. So your goal is you've got your ETFs, your things growing, okay, and you have this investment in there also, and then this investment drops in half. You're like, well, I still got the ETFs, so you continue to hold, or possibly be in a situation where you can buy more. And so let me show you that real quick. This is an account that you can use to buy cryptocurrencies. You heard a lot about them. This is the most popular one that everybody's seen, which is Bitcoin. Bitcoin went to peaks back here in 2011 May, dropped way down. Looks like the bottom was around 30,000, and now back up to 50,000, which is, maybe not as good a value as here, but still good. Now, is this what I'm in? No. I have a little bit of crypto in Bitcoin. Let me explain to you this way. When you go to the store right now, you swipe your credit card and you think you're spending money, but you're not. You are swiping a credit card and digitally everything happens. Now, below that layer, there's dollars. You have dollars in your bank account, your debit account. And below the dollar layer, you have gold. So you start with layer 1, which is gold. And today that's been replaced by the taxing power of the U.S. government. But you have layer 1, and then you have dollars, which is on top of that, which is layer 2. And then you have, your swipe and your electronic transfers, which is layer 3. Now, the same thing happens in digital currencies, and for the same purposes. If you go to the store and you take gold with you to the store and you say, hey, here's some gold, that's a very cumbersome way to buy things. Anymore they can look at you like you're crazy. Gold on the internet, as far as crypto, is Bitcoin. Bitcoin is gold. It is big, it is cumbersome, it's expensive to transfer, it takes a long time. Now, is gold bad? No, gold's not bad. Now, layer 2, which I would equate to your dollars, is Ethereum. Now, Ethereum is faster. It can do more transactions. But you see also, the value is less. And so, going to the dollars with the store with your dollars, you pay the $100 bill. It's easier than paying with gold, but not as easy as layer 3. Now, layer 3 is right now a competition. It's competition for who can do that massively parallel transactions on the internet. And I have some Ethereum. I think Ethereum is going to be something that goes up over time consistently, and it's a good value. But the digital currency, the third layer, you have Cardano. Boom, right here. $1 up to $3. You also have, well, let me just show you the portfolio I have on here. Now, this is just my buying spot. It's not my holding interest. So it has a few things. Layer 3, oldest one, Cardano. Another one that's being used is Polygon. And then Solera is what I would consider kind of the newest layer 3, platform. And so this is what I do. I go buy on this site. This is Coinbase Pro. It's a little more confusing than other sites. And then I would go and basically withdraw, and I would give it a crypto address and transfer it to another site, which is like an online wallet, and I earn interest on the money. And my purpose is business, not speculation. So I'm not looking to say buy Solera and it goes up to $10 and then I sell Solera for a $5 profit. I'm more comfortable with buying Bitcoin, Cardano, those things, transfer them to an online wallet and maybe earn 4 to 10% interest while I hold those. Now, the difference between that interest and a dividend is if a stock is worth $10 and it pays $1 dividend, when the stock is worth $20, it still pays $1 dividend. The dividend is a separate thing. So if the stock pays $5, the dividend supports it because it's a 20% dividend then. But in crypto, I'm earning, for instance, my Bitcoin is 6.2% dividend. If Bitcoin doubles in value, I'm still earning 6.2%. So now I'm earning twice as much as a flat amount. So if you can get into cryptos and then they double or quadruple, let's say you have a 4% Ethereum dividend, and Ethereum goes up by 4 times, maybe to 10,000, which some people expect. I'm not sure. But now you're getting a 16% dividend. A 16% dividend by the rule of 72, which says if you divide the percent dividend by, or the return by that, it says every 4.5 years that money's going to double. That's a phenomenal return. And that's kind of what I'm looking for, is if I can hold these, I can end up with maybe even half my money in dividend stocks that maybe earn 16, and dividend cryptos that earn maybe 16%. Then in a period of 4 years, I'll overcome my losses if I have any, for the other half, and then it's just growth from there. So you're looking, 4 to 5 years out, you're in the money making 16% on your investment, which is incredible. And that is most probable case. That is not, best case on the situation. Best case on the situation, it can go crazy, it can go 10 times, like it's done before. But I'm not counting on that. What I would look for is that kind of a return. Half of them maybe go to, 10 to 15% dividend on the stock. I added below, some links, link to Coinbase, which Coinbase Pro is, you open a Coinbase account, you also have a Coinbase Pro account. I'm linked to Nexo IO, which is a wallet you can hold and earn crypto on. And then also Blockfi, which is one that I use to hold, just kind of a stable coin like USDC, earn interest on there. It tends to be one of the most reputable crypto platforms. So I use that link below. And then Webull. My son and I have a Webull account that we're planning on using, 50-50 for, some trading experiments that we have. Like and subscribe, and maybe I'll make another video. Hopefully this is the, third worst video that I've made. I'll get better at, the eye contacts and things like that, but I'll talk to you later. Bye.